Welcome to Traders Consigliere Weekly Analysis. We look at the fundamentals and the technicals for the upcoming week to find potential trades that we could possibly take. We look at the previous week fundamentals, then we'll gauge on the upcoming week fundamentals, right? And then we'll look at the technicals. So, from the previous week, we didn't have a heavy fundamental week last week. The main statistics last week was the GDP. We had a final GDP for the dollar, which came in stagnant from the same as the current the previous reading. So the GDP still stays stagnant. It isn't increasing, which shows that the rate hikes are yet not really working. The GDP is supposed to be dropping if the rate hikes are working, because more rate hikes mean an economic recession, right? The economy has to recede. So we still see the numbers stagnant. On Friday, we had core PCE price index. The number came in at 0.1%, which was a tad bit lower from the previous reading, right? And also the forecasted number, right? So the number did came in lower, and this is the change in prices of goods and services purchased by consumers, excluding food and energy. So number did come in lower, which in a way shows that the rate hikes are working. And this was a very important number that Powell mentioned, the chairman of the Federal Reserve, right? So this number did come in a tad bit lower, so it's quite interesting to see. So let's look at the upcoming week, the first week of the fourth quarter. We are inside. We are done with 3 quarters of the year. So the last quarter of the year, and this is the first week of the month. So we have NFP data. The first week of every month, on the Friday of every month, the first week, we have NFP data, right? The lot of job data that comes out, employment data. So the first day, we have ISM Manufacturing Index, which is the PMI, Purchasing Manager Index. And this number is forecasted to come in a bit higher, which is bullish for the dollar. We have Chairman Powell speak, which would be very important to see what kind of remarks he has. This can maybe show us a future outlook on where dollar may be heading to. Very important. We have Joel's job opening. This is a precursor to NFP, right? Comes before NFP, and this number does come in at 8.85%, million, which means the job market has increased. There are more job openings. So that is bullish for the dollar still, because if the rate hikes are working, these numbers are supposed to come in lower, right? So that is bullish. We have ADP non-farm employment change, which is also the precursor to NFP. Again, these both data are regarding the job market, right? The employment market. And this number is actually the contradictory, and this number is supposed to come in lower than the previous month, right? So important to keep an eye on that. We have services PMI as well. So the main event of the coming up week is NFP, which is on Friday. On Friday, we have NFP data, and NFP is forecasted to come in lower, right? A lower amount, 168K. So if you don't know what NFP is, it's the change of number of employed people during the previous month. So employment, a drop here shows that the rate hikes are working, meaning that the economy is receding, right? So it's a good thing for the Fed if we have a lower job number coming up for the next week. That means the rate hikes are working. But if the number does come in higher than forecast and even higher than the previous reading, that is very bullish for the dollar, which we have been currently seeing. So that's with the fundamentals. Let's look at the technicals. Let's start with the dollar index. So we had the monthly candle closures this week. So we're going to start with the monthly time frame for all the pairs. On the dollar, it's clearly bullish. It maintained a support level at 101, and we have been seeing straight momentum since then. It has been quite bullish, and I think we may get a full pull. The price, probably we'll see dollar maybe rally towards the 110 level, possibly over the coming weeks. Right, so it has been extremely bullish. So knowing our fundamentals is bullish and the dollar index also is aligned, that means dollar is strong, right? So that's how we will structure our trades as well, where our fundamental and our technical bias are aligned. So let's look at the dollar and Japanese yen first. Bullish, very bullish pair, just because the dollar is bullish. The weekly time frame is bullish, right? It's nothing to And here you see on the daily we have a bullish structure as well, right? So what I'm expecting here is on the 12-hour time frame, I'm possibly to want to see a supply price hit here around here, which was at the all-time highs, the previous all-time highs. So if the supply can hit here, I want to see what kind of reaction price has, and if price can give me a structure shift such as this is where I possibly take a short position, but this would be a counter trend position. The main position that I would possibly like to see is if price can actually pull in here towards this area and didn't give us a structure shift. This would be a higher probability long position, but depending on where price reaches to during the upcoming week, that's how I'll react and adapt. This supply area sits around 150, 150, right? Pretty much. So this is where I'll look to possibly take a short counter trend, or if price does give me a retracement all the way towards this discounted level of demand, this is where I'll take a long position. British pound, Japanese yen on the monthly time frame first. So we have been having a consolidation. The monthly time frame isn't telling us much. We are in somewhat of a consolidation. So let's look at the weekly time frame. The weekly also is pretty much quite choppy, right? We did have a push, and technically we are bullish, but it is a bit choppy. We're stuck inside a range, and I would personally like to see if this structure point here could break through. That would give me a higher probability short position, sell positions that I could possibly take, right? If that breaks. Let's look at the daily time frame, and on the daily also we are bearish, but at the moment there is some form of a structural shift that we did see. The H12 demand zone did get hit last week, the previous 2 weeks actually, and then we saw a price shifting structure around here. All right, so knowing that, I will personally wait to see if price can actually give us a break below here. But if you do want to take a position, there is a possible position. You can take a sell position. You see how the daily candle has hit a area of supply. I think the supply sits at the H8 area, the 8-hour time frame. It sits at a discounted level of supply, and now we already have been seeing reactions from there. What I would like to see is if price here can maybe on the 1-hour time frame give us a break below these lows. Once price can break through these lows, then I'll possibly start looking for a short position. So price is there. We are just waiting for the structure shift. Once that happens, possibly you can take a counter trend, possibly a short position here. So this area is at the 182.800 area, which is the area actually I had marked off last week as well. So price did come in, tap into this area on Friday of last week. Let's look at British pound dollar. British pound dollar is very bearish, right? So because of the dollar strength. The reason why the British pound Japanese yen is so choppy is because both currencies are at the moment a bit weak, right? So they're battling with each other. But on British pound dollar, we have a clearer structure. The main reason why is that the dollar is much stronger than the pound, right? So the monthly candle tells us we have a bearish structure, right? The weekly time frame gives us also a very clean structure, right? We see a straight momentum towards the downside, and now finally price has hit a weekly area of demand, and in the lower time frames we started to see a lot of bullish volume order flow come in. So we had a bullish engulfing on that area, and what I would like to see now is on the 12-hour time frame is to see if price can now come towards this area of demand and give us a somewhat of a structural shift where we could possibly take a long, and this would be a counter trend position, right? But the main position that I personally would like to see is if price can give us a retracement towards this area instead, maybe over here towards this daily supply at the 1.23750, and then see a structural shift where I can possibly take a short position from, right? So this would be what I'm looking for the pound dollar. Let's look at gold now. Gold is finally has broken out of the range, and now we can finally look to take trades on gold. On gold we are bearish, right? We have had a triple top position there, and then we had a bearish engulfing from the previous month. Weekly is also a very big bearish engulfing, right, towards the downside, and it's now hit an area of supply. I believe this is on the daily demand, sorry. has hit a daily demand, and maybe we could possibly see a retracement towards the daily supply. Me personally, I would the high probability would be to see if price can actually give us a structural shift at the supply area here. All right, a structural shift where we could possibly target this demand, or maybe also possibly to take counter trend positions if price actually breaks above these highs here, this swing highs. We can maybe wait for price to do something like push up, break these swing highs, and then come towards another supply zone left behind, and then take a position. This would be a market structure shift with a another demand zone created here, right? So this would be a counter trend position. So that's what I'm looking at for this upcoming week. This would be at one point around here, 1846 900 area. Let me mark that off around here. So that's what I'm looking at with gold. And with index now, let's look at indices. Let's look at SPX, S&P 500. It is bearish, right? We have been seeing a lot of bearish movements, and has to do with fundamentals as well, because we expect the interest rates to be higher much higher than projected. We'll have another rate hike and less rate cuts in the coming year, which is not good for the equities market, right? So this is bearish, right? Fundamentally at the moment. So we do see a bearish structure, right? And on the daily also, it is bearish. So I would like to see here, because I would like to see what kind of price action we get around this zone here. And if we can again get a structure shift, we'll take a short position. But if price does reach again over around here at the demand zone, maybe we take a counter trend position here, right? But I think from what I see, the NAS 100, right? So let's look at NASDAQ. NAS 100 looks a bit cleaner this week. So on the monthly time frame also, just like S&P, it's bearish. It's pretty much mimics S&P 500. So clear bearish pattern, right? We have gotten that break, but the only thing I don't like here is this structure here this candle hasn't closed below that structure point. If that happened, it would have been a better higher probability to look for short positions, but we can still take short positions, but maybe we need to decide on the risk management, right? So if we get a push here and a structure shift here on the daily supply at 15,350, possibly I'll take a short position there. But if price does drop towards this demand here, right, at 14,330 pretty much, this is where I'll possibly take a counter trend. But I believe I would try to avoid the counter trend just because we have a massive demand sitting below that H8 demand, right, which is where price could possibly head to. So the demand is zone here is something I would try to actively avoid. But obviously, best to join the free Telegram group. That's where I'll update regarding these trades. All right, so let's look at US30 Dow Jones. Dow Jones, we saw bearish engulfing, but the structure is still in a very dirty range right here. All right, I would have liked to see price break the range here towards the downside to give us a confirmed bearish bias on the monthly, but it's still in consolidation. The weekly is bearish though. Right, weekly is bearish, the daily is also bearish, right? So it would be best to again take short positions if you wanted to trade the Dow Jones. Let's look at the 12-hour time frame. So on the 12-hour time frame, if price can actually give us a retracements towards this area and then we get a structure shift, then I'll possibly look at taking short positions here. Or if price actually moves towards this area here on the demand and then gives us a structure shift, this would be a counter trend position, right? So the area above here, this would be at 34,550 around there. Let's call it flat 34,500 maybe. Yeah, 34,500 area, right? A major quarter point, or in this area here at 33,000, right? 33,000 is where I would like to see what price does. We have a daily demand here, so possibly we see those structure shift and maybe some bullish order flow here. But This is what I'll be waiting to see. But at the moment, the best setups this week I see is currently is possibly GJ giving us that structural shift, maybe to take a short position. Gold giving us a counter trend structure shift, possibly. The pound maybe also. And if dollar Japanese yen can hit that supply, then I would be looking to take short positions. So at the moment, I see the best positions on the forex pairs and the commodity such as gold. With indices, I'll update you if I see any setups. And best thing, join the free Telegram group. That's where I update regarding all the trades. So I can't stress that enough. Join the free Telegram group. So see you now next week. Thank you.